Hey everybody, welcome. This is my first live stream that I've actually done interactively, and I want to welcome you to the channel. If you're new to the channel, my name is Brad. This is Firefighter's Financial Toolbox, where we talk about all things to help you improve yourself and have an all-around better financial life. So if you haven't already seen my YouTube channel, welcome. First of all, I want to thank all my subscribers now that we are up to a total of over 1,000. Been working on the channel now for about a year and a half. I have about 240 videos total uploaded, and we cover all things investing, retirement, some taxes, and all this stuff. The one thing we want to say is if you guys have ideas, put them in the comments of the videos, you guys. It helps me think of new things to make videos about, because believe it or not, it's a little bit video block if you don't. A little bit about myself. I am a 19-year career firefighter with a large department here in Oregon. Forgive me if I cough a little bit. We've been quite busy with the wildfires here as of late, and they have been quite taxing, and I've developed a little bit of a cough from eating all the smoke. Anyway, a little bit about myself. Grew up here in Oregon and of normal family, but early on I was not very good with money. Didn't make a lot of good choices, and it showed. In fact, the first 401k I had when I still worked on private ambulance was because they required us to have it. You had to opt out, and I didn't even think about it. So they automatically put 3% in, which is what they covered, and worked there for about 8 years. And at the end of my tenure, I cashed out my 401k. What a dumb mistake. All the gains that we had in the 90s wiped out. So when I got hired with the fire department, we started 457. 457, for those of you who don't know, is basically a 401k for public employees, usually employees that have some sort of a pension plan. Anyway, so as that started, I started joining that. And then my mom died. And unfortunately, fortunately for me, she did leave a little bit of a windfall, but unfortunately I lost her. But when I got the money, and it wasn't a huge amount, you guys, but it was enough that I didn't want to make a mistake with it. So I kind of put it in account and started asking a lot of questions. In fact, I asked the person who is our 457 she's the person we deal with for that, but she also is a financial advisor. And I was like, hey, this is what I've got. And she's like, well, do you have a Roth? And I'm like, no, I don't have one of those, because I don't want to have to put it in every month. Because I remember when the Roth first came out, and they told us that, you open it up, and this was the bank telling me, of course, back in 98 when it first started. And they're like, yeah, you put in some money and I put it in every month. And I'm like, put $50 in every month or whatever. And then it grows and tax-free. Well, I misunderstood that to mean that I had to put it in every month. I'm like, well, what if I don't have $50 to put away? Anyway, long story short, so we opened up Roth for myself and my wife. We also put some money in a 529 plan for my son for college. And then we had some more that we started investing with. And as I started asking more questions and started reading more, I started getting more excited about it, you guys. And I found the more that I read, the more I learned, the more I wanted to know more about other things. And it kind of became a hobby, if you will. And at work, I would have people that would ask me questions. And I said, I should just make videos, because so many people had asked me the same question. I make a video and just, here, watch this. And somebody said, well, why don't you do that on YouTube? So here I am. Anyway. This channel grew out of that. So I acknowledge that because of the name Firefighters Financial Toolbox, a lot of people take that to mean that I only help firefighters. Obviously, I think that's one of the reasons a lot of my videos haven't been found as fast because of that. It certainly is all encompassing, you guys. I do make some videos that are geared towards firefighters, but I try to make the information that will help everyone. And so as we do that, obviously, I think the community has grown. I think the word's getting out a little bit, which I'm happy about. Anyway, I see we have one viewer there. Why don't you comment? Let me know how you're feeling, if you can. Anyway, that's a little bit about me. The reason I like to do this is, as I said, once I figured out that you can learn a lot just by reading and experimenting. I started figuring out that saving wasn't really as hard. And I looked at some of the things we were spending money on, and we actually started saving quite a bit after that. Hey, Don. Hey, Don, thanks. I appreciate that you enjoy. John, what are you a firefighter? Is that why you have a 457? .457s, yes. It's funny because there's not a lot of videos out there on it because it's not as common as a plan. And most of us that have 457s, as you know, the biggest drawback is if the employer does give a contribution into the 457, it counts as part of our contribution each year, which is kind of a drag. Our employer, my employer, law enforcement. Okay, so, but you're same thing. You can retire early like I can, and so we have to plan for retirement to be a little bit longer than the normal person does, and that's important. As I said, we're fortunate in my department that they actually have a 401A account that they put a match into, so it doesn't count against our does not count against our contribution. Remember, the other thing about a 457 that's nice is in your last 3 years before your regular retirement age, you can actually do up to double contributions, depending on whether or not you had actually. Oh, congratulations! I've got 4 more years, but you can actually add as long as you haven't already maxed it out all through your years, you can max up to double contributions in the final 3 years. But 55 and ready to go. I'm right with you. I'm 51, so I'm counting up those days. Anyway, you bet. If there's anything that people are curious about, different kinds of counts. For example, I think everybody should have a Roth, because now with the backdoor rule, pretty much the income limits, as long as you don't have any other traditional assets, are out the door. Everybody should have some tax-free money, particularly for those of us who are going to have pensions. Tax-free money is going to be quite important because unlike some people, we're not going to be in that super low tax bracket as a lot of people are. Also, I think it's important because most people have tax deferred, right? Most 401k plans. What is my ratio of domestic to international index funds? Ruggiero, thank you for the question. In my case, I actually have about 25% in international. And then I'm about 75-25 with 75% stocks and maybe 25% in cash and bonds and this sort of thing. But of my 75%, I'm about 25% in international currently. And as you know, international has been terrible as of late. So good question. Really good question. All right, Don, I appreciate you coming out. Take care of yourself. What about you, Ruggiero? What do you have for your ratio of domestic to international? And I'm curious, is anybody out there a dividend-only investor? I consider myself primarily an index investor. Now, full disclosure, I do also have some dividend stocks. I have some dividend ETFs, but most of that is in my taxable brokerage account, except for my REITs, which I keep in my Roth. Excuse me, for tax reasons. With REITs, of course, those are never qualified dividends, so you're always paying ordinary income. So I don't want to pay more taxes than I have to, so I always keep my REITs in my Roth account. Riggio, you're 70-30, but like you said, international has been pretty bad this year, so I was thinking of rebalancing. Yeah, that's a good. Let me put you up there. Yeah, that's a really good point, Riggio. It hasn't just been this year. It's been probably the last 6 to 7 years that international has definitely been not showing up as well as some of the others. That being said, I feel like, remember, the United States market is really only about 46 to 50%, depending on the time. It changes a little bit each year, but it leaves a lot of stocks on the table. There are people who say, hey, I don't want any international. And that's personally, investing is a personal thing, right? What works for me doesn't necessarily mean it works for everybody else. And so I always keep some, and usually I'm about 30% was my gauge. Now it's dropped a little bit since we've had such a run up in the S&P, obviously. So it's skewed my numbers a bit, but 25 to 30, somewhere in that range is about where I like to stay with the internationals. Anybody else got a question out there? I'm having fun with this. I hope you guys are enjoying it. Once again, I want to thank you for making my channel what it has become. Now, as I said, we're up to about 240 videos now, and we cover everything from investing to retirement, taxes. I've done a few videos even on credit cards and debt, although those don't seem to be quite as popular on this channel. But I think the important thing to remember is that you have to take and look at the whole picture, right? Making a few good mistakes can really, really derail you. And so having a well-balanced financial picture makes everything better. All right. Got another question here. How about holding a gold ETF? So, Ngook, that's a great question. I don't currently hold any precious metals because, well, I think holding them in an ETF, if that's a choice, is a better way to hold them. Obviously, people buying gold doesn't make sense because you have to pay to store it, hold it, and it just doesn't work for me personally. As a hedge against inflation, there are people that argue that gold is good. I don't personally use it, but I understand the reason that people would hold it. What about you? Do you currently hold the gold ETF? I'd be curious to see. And if you do, how much do you hold? I'm actually kind of curious about that because that's something that I've never really had to think about. So I don't know. Okay, so back to index funds. First of all, I think index funds for most people are probably the easiest way to invest because really, especially if you're just starting, you guys, a lot of people are more concerned about picking the right fund, picking the right everything. Here's the thing. If you go out and you want to get started investing, especially if you're just starting from zero, you guys, pick any generic, either an S&P 500 index fund or what I prefer is a total U.S. stock market index. Think of your VTSAX from Vanguard, your Schwab total stock market index, your Fidelity total stock market index, any of these or the ETF versions, right? VTI, SCHB, ITOT from iShares, any of your general full service U.S. stock market indexes is going to give you a pretty good return. And until you get over maybe $100,000, it really doesn't make sense to diversify into a whole bunch of other things. Now, full disclosure, a lot of people, I mean, in your 401k, I think the easiest way if you're just starting out is probably just pick a index target retirement fund and put money in it. Then you don't have to worry about it because it's going to get less aggressive as longer you're there, and it's just going to appreciate. Simple is good in investing. I think the simpler you can keep your investment portfolio, the better handle you'll have on it. Now, that being said, I'm at a point where I have a total of 15 accounts across my wife and I's portfolio, and it is more than we need. But I have each of the accounts for a certain reason. When I first started buying dividend stocks at Vanguard, it cost $7 a trade. So I opened another account where it was cheaper. And then I found an account where it was free. Now they're all free, but I still have the 3 accounts. Someday I will look at putting them all into one account because it's much easier. The other thing I want to say is with fractional shares, platforms Robinhood, or the one I use, M1 Finance, are great options for people to start investing small amounts, right? Because of the fractional shares, you don't have to pay the full price for a share of a stock or a share of an ETF. You can buy $10 worth of it. That is something that has revolutionized investing for the general public. I mean, I remember back when I was young in the late 80s and 90s, investing was a rich person's game. You had to go to a stockbroker. If you didn't have enough money, they didn't want to help you, and everything cost a lot of money. So it kept a lot of people from actually investing because other than their 401k, they didn't have the money to do it or even the knowledge. Now, I mean, plus back then a trade could take, a day or two. Now you punch it in the computer and 30 seconds later you own Apple or whatever else you buy, right? Certainly a different investment world right now. And I think it's a better time. I think with, excuse me, that would be the smoke from those fires. Because of all the investment platforms that have made free trades. I mean, you see now the big brokerage houses are taking notice because they're losing clients and they're deciding, hey, we need to do something about this so that we can also get in on the bandwagon. So, I mean, pretty much all of your brokerages out there, if you're paying for commissions, you're paying commissions for trades, leave and go somewhere else. But also just remember the most important thing is to keep putting money in regularly, right? That way, as the stock market goes up and down, you're buying the dips, you're buying all the time. And in the long run, I think that's going to be the best thing for it. Anyway, hope you guys are enjoying this. If you are, do me a favor and drop me a like. If you're not already subscribed to the channel, you know the deal. Subscribe. I try to put out content. I love to hear from you guys in the comments. I love getting questions. I love to actually, the ones I enjoy the most are the questions I don't know the answers to, because then it gives me a chance to get on the internet, get into books, and try to find out the information for you. Full disclaimer, you guys, I am not a financial expert. I don't pretend to be one. I don't play one on YouTube. I just like to put out information that I've learned to help everybody else become better investors, become more financially sound in their life, and hopefully keep out of debt so that when they get to retirement, they can enjoy it as I hope to do in a few years. Anyway, you guys, we're right about 20 minutes now, so I'm going to go ahead and shut this down. If you have any final questions you want to put in the comments, please do that now. If not, I'm going to go ahead and say good night. All right, we'll see you. Thanks for coming out.